Okay, this is gonna be the first episode to a series I'm starting. It's gonna be foundations, everything you might want to get into and learn about in order to get into trading, starting from scratch. If any of you are new traders, have never heard of it, touched it before, I'll be explaining what I trade on, how I do it, and also how to navigate TradingView. It's kind of gonna be the biggest thing about this video. So I trade futures. A lot of reasons as to why I trade futures. The main one being if you're looking at the trading, there's going to be forex options, futures, anything in between. I think futures is the best way to kind of avoid news volatility and get rid of uncertainty in the market and kind of just solely focus on liquidity, which is what I trade. I'll also be explaining that in future videos. Uh, but yeah, so options, if you're trading any sort of individual stocks, you're mostly trading off of news or like mass volatility, and it's almost a coin flip at that point. If you're trading indexes through futures like I do, you know exactly when the big news things are coming out. So it'd be non-farm payroll, PPI, CPI, all that is online, and you know exactly when it's happening. So you know when to avoid the market when these things happen, and that removes uncertainty from your trading. So you can only focus on how you trade your model and remove that coin flip and that kind of gambling part of trading when it comes to news coming out. Also be talking about that, discussing that later on in future videos too. So to start off, here we have oh shoot, I didn't even move my face. Hold on. Here we have the TradingView home screen. Gorgeous as it is. So if you guys are going to get into trading, I suggest looking up TradingView. It is a free platform, just to kind of get you used to markets and candlesticks. Now, if you want to trade live markets, whether that's back testing or applying prop firms or your own money, you have to actually pay for TradingView. That being said, for anyone that's getting into this and getting started, I recommend just getting it for free and getting a taste of how everything is. If you are paying it for free, or if you're getting it for free, it's going to be a 15-minute delay, I believe, on any live market. So you won't be seeing the live market. So that's kind of the only difference. But that doesn't give away too much. If you're not looking like on news or talking to your friends that are already looking at live market, you won't get a sense of where the market's going to go. So you can still kind of live trade and back test the strategy or just get used to how you read charts in general. So we're going to go from here to where I have my indexes. So see on super charts, here we have MNQ. We're going to take away all these drawings. We're going to discuss that later on. But here we have MNQ, the NASDAQ, basically a collection of a bunch of other stocks put into one. You can look up more about indexes if you guys are interested in it. But this is kind of where you remove, like I was saying, the uncertainty before. So instead of having one individual stock that reacts massively based off of news, whether that's new product lines or anything else within a company, you could give Tesla, for example, let's say a new robot's coming out. Within that day or that specific time frame that they're releasing information on that, the market's going to be crazy up and down. And it's the same thing with this, but you know when things are coming out. And for individual stocks, it's a lot harder to guess. And you could have kind of random news that comes out. Even the individual CEOs that are connected to these companies could have massive effects on how price moves. So if something happens to Elon Musk, that could completely change how Tesla moves. I'm not saying something bad could happen, but literally anything. You can post something on Twitter. He's big on social media. Something in any sort of that caliber happens that can completely throw off the market or change it or throw off the way you trade. So any traders out there that are watching this video too, like kind of tell me how you feel in the comments, I guess. But for me personally, I like to completely eliminate that whole factor and just trade solely based off liquidity. So starting off, we have MNQ. I'm going to walk through the three of the indexes that I use or kind of that I used to touch up on. So NASDAQ, MNQ, micros. We have, okay. We have the S&P 500 and we have YM, which is the Dow. So all of them move in somewhat of a correlation with each other. You could kind of, especially ES and NQ, you'll see like very similar movements or just a lot of similarities between how they move. This is on the 1 minute time frame, by the way. So if you actually put them side by side, you could almost start to see, this is the 1 hour time. It was the 1 minute. Very similar, right? And that kind of leads into other confluences that I'll be talking about in other videos. One being SMT divergence. So when these charts are not perfectly aligned or is that there's some sort of difference in them, you'll see price movements depending on where it is. And we'll discuss that later on, like I said. Anyway, going back to NQ and the main screen. So I guess I could just start walking you guys through everything there is to know about TradingView, or everything that I could possibly talk about that I use personally. On the top left corner, you'll see all these little tools that you could use within TradingView. The first one being the selector tool, the cross. That's just how you drag around the screen. Left click, you just move around the screen. This side kind of drags the price up and down, so you kind of elongate these candles or bring them down and make them small. Right click, I use this a lot anytime I'm going through time frames. Right click, reset chart view. That kind of just lines up the chart, so that it's, I don't want to say pretty, but it doesn't look, ugly. Like if we could go into like a 5 minute time frame, or what, even better, 1 hour, it starts to look a little bit, sideways. And if you're playing around with this side screen, like you can't read charts at all if you're looking at the chart like this. So right click, reset chart view, goes back to normal. Again, moving around however you want. For anyone that's starting this off, following along in this video, taking notes, I recommend just getting TradingView and playing around with it for a while. I don't want to say like target practice or aim practice here, but you could even do that if you want. Like this candle over here, zoom in on it. Now we're looking at it, right? You can do that for every candle you want, just to get a sense of how this stuff works and how it feels to play around and move the charts around. So I guess we can go into tools now. We have, starting off, all these trend lines. I don't really use trend lines. I might use a horizontal ray or a vertical line, depending on if I'm marking out draws and liquidity, certain highs and lows. So let's just, for example, take the horizontal line. If you hold control, this little magnet thing pops up on the side. So that's what kind of glues your crosshair to certain levels. So wicks or bodies. So if you want to mark out a high and you don't want to like completely perfectly line it up with your crosshair or with your mouse, you can just hit control and kind of hold it within a general direction of where it is and just pop it, and it'll be the perfect price where that high of that wick was. Actually, you know what? Let me even mention this. How my background looks. So a lot of people, when you look at charts, it's just red and green candles. I think, I haven't done this in so long, so this is kind of a learning experience here too. That's not it. Is it just the settings up here? Oh, there we are. Okay, yeah. So if you go to the top right and hit settings, you'll see symbols, status lines, scales and lines. All of this doesn't really matter. What I will say though is this is the main thing that people switch around to make it more of theirs. So I see a lot of different charts people have. It's literally just whatever you like looking at, whatever is easy on your eyes, whatever helps you understand what you're looking at. A lot of red and green. People do gray and black. People do, black and red. There's literally any color you want as long as it works for you. I've seen people do like pink on purple, make their charts look really pretty. If that's important to you, you can do that. I stuck with black and blue mostly because TJR, I'm sure some of you are familiar with it watching my video. TJR has this similar background on his charts, and I kind of just copied it because I like the way it looked. And it's clean for me, it's easier to see. Is there anything else here? I don't think so. Time zones, right? Okay, so when you go into settings, depending on what time zone you're in, I think it automatically goes to I actually don't know what it goes to. Yeah, that's not important though. So if you go to your time zones, here it tells you exactly where your time zone is, whether you're in Honolulu, Los Angeles, Casablanca, wherever you are. I'm in the tri-state area by New York, in Jersey. So New York is where I put it. And that's fits my time frame, right? So right now I'm recording this at 3:22. And on the bottom here, I can't see my face in the way they move that. On the bottom it says 15:22 for 3:22, right? So that's fitting. You want to actually be on the times, or on the charts, the times that you should be. And I'll probably get into that too based on what times you want to trade. So there's New York session, London session, and Asia session. I trade New York session personally. There's a lot more volatility within New York session. Some people should trade Asia session. It just kind of depends on your schedule. You could trade Asia session. Let's say you have something to do in the morning because market opens up at 9:30, and I trade anywhere from 9:30 to 11 o'clock. If you have something to do in the morning, you could trade Asia session. Why is it so hard for me to say? You could trade Asia session or London session. Um, it's it's dependent on how price action is, because a lot of the times you'll have phases depending on what the time zone is. It's not particular to the time zone, but New York session has the most volatility. But if oh my god, I have to stop saying. I'll just go London session. If London session has, let's say, a bit of a breakout, like you're seeing right here. This is on the 1 hour time frame. When was this? This was during London session. Yeah. So if London session has a bit of a breakout, you could expect Asia session to be a little bit more tame, have a bit of a range, and that's just how the market plays along itself. So literally, you'll see these patterns on and off. You'll see chop into movement, back into chop, some more movement. And this was through that whole session. So there is no like really perfect time frame. It's just whatever works for you. But most people, especially on the East Coast, prefer New York session. One, because it's convenient for them; they're on the right time frame. Market opens up right at 9:30, the same it does for everyone in the East Coast, and you have the most volatility in New York. So, if I were to recommend a time session, I'd say New York. But besides that, you know what, you can learn how to trade no matter what time session you're in, and that also kind of lead us into back testing. But back to what we were saying with the trend lines. So you have a little trend line here that I just marked out. When you mark it out, it might be a little bit different just because I have it set to a different setting. I think it's just a black, like a solid black line. So if you guys want to edit it, you're going to click on the line and this little thing up here is going to pop up. And here you could edit the color of it, edit the text if you want. I think the easier way to do this is if you just double click this, then this whole thing pops up. And you have a text you could put on. So if you want to say, uh, draw, you could say 15-minute draw. Let's just say it's not actually right because it's a 1 hour. You know what? You could say 1 hour highs. That's actually more fitting. 1 hour highs. Change that color however you want. You can align it wherever you want along this line. So because it's a horizontal ray, you don't want to put it to the right because that is infinitely to the right. You won't actually see that. So you could put it top left, and then you'll pop up right here, 1 minute highs. And that goes for every other tool I'm going to show you here. Coordinates are really important because that's just where it's sitting at. Visibility, I never touched this in my life. I don't think you guys need to either, but you know what? You could just play around with it if you like. Again, play with the colors. And when you're done, when you're happy with how this looks, if you want to set these 1 minute highs all the time, if you're going to be using this specific line consistently, then you could right click it, template, save as, and then you could name it 1 hour highs. Oh wow, the caps is on. 1 hour highs. Save that. And if you ever were to delete this, remove all your drawings, come back on the chart, and you see these highs again, not these specific highs, but let's say you go somewhere within the future, past, wherever you want to mark out some highs that are on the 1 hour time frame. You go back to your line, click it, and now here you're like, wait, where's the 1 hour mark? You know, that's not the same line I made before. You're gonna right click this line, template, and then here you have 1 hour highs along with everything else I have down here, half of which I don't use. But yeah, you're gonna have 1 hour highs here. You click it, and it's the same exact thing you saved before. That works for any color you want, any text you want, any line you want, anything you want on this left side. You could customize for yourself, which is why I like TradingView a lot. I think a lot of platforms use that in general. But I'm familiar with TradingView, so that's why I like doing it. Also, everything's saved on here that I have. We can kind of go down the line here. Yeah. Again, all this stuff works the same for all these lines. I might use vertical lines for news. So if I go into Forex Factory here, today we had 10 o'clock news for a red folder. So that's expecting some good volume. Actually, I don't even know if we got any today. We could actually check this out right now. Which is also, I'm going to just use this as we're talking about it. You go to 10 o'clock time frame, hit control if you like, place it. There you go. And then I also have one saved, I think, for high impact news. That's like a little red dotted line that I have. So while I'm in the markets, we could just do a little replay mode. Go to 9 o'clock. Go to the 5 minute time frame. And we'll just skip through until we get to this red line here that I have marked out. So again, you use this line, it tells you, I mean, you can do it for anything, but because it's a vertical line, it's more on the time frame axis, on the x-axis. So it'll tell you anything that's happening within that respective time that you put that dotted line at, or that solid line, or whatever you want to do. Actually, I didn't even go into that either. Yeah, if you click into this, you could change what line it is. So thickness, line style. I do dotted lines for any sort of time frame. Yeah, so we're gonna click it through, see what happens to price. 5 minute candle comes out and you get a fat wick, right? So while I'm trading this, I know to avoid this time frame because I marked it out. That's just kind of the helpful part here. That's why I use this. Anything else? Let's see. Nothing really here that I use. You could use a horizontal line instead of a ray. You could use a trend line. Trend line is basically the same thing as a ray, except it's 2 points wherever you want to put it, right? So we use this for SMTs, like I mentioned before, which I haven't gone into what they are. And if you're a new trader, you're probably confused as to what I'm talking about. But it would be marking out highs or lows relative to two different indexes. So if we wanted to use it, we do this high to this high that we just created. Let's say that's an SMT. hit SMT, and that's my saved SMT thing. It's just says SMT ski on it. That's basically it. So yeah. All right. That's kind of it for lines. We can move into fibs, which I don't use any of these. So for some traders, they do. They enjoy using them. I don't really use anything. I might use the retracement, which I don't think I do anyway. Yeah, I never really use this once. I think I used it when I used to trade a different model. So if you guys want to look into good fib retracements, it's kind of just a projection based on where price should go from recent highs and lows. I don't really use it a lot. Again, if you want to use it, look into it more, find more videos. For me, not a thing for me. But like, let's just project it out anyway. I'll show you how to edit it. There you are. So this is what you're gonna see. Fib retracement is gonna pop up a bunch of colors, a bunch of numbers. You customize it however you want, and it'll kind of project based on how long this line is. And yeah, that's all it would really help you with. So the only other thing I use here is the Gone box, and this is just to mark out equilibrium levels. Either if it's like a high that I'm marking out, or if I'm looking to go break even on a trade and there's no resting liquidity or low resistance liquidity in the way, I'll mark that out as my break even, just a halfway point to my trade. So let's say, for example, if we didn't have these highs here, just remove them from the screen. And we did a little something like, what am I looking for? Yeah, long position. Let's just say we took a long right here. We target this data high and then use these bodies as our stop loss. But we have nothing to really tell us where to go break even. So we're going to go back to my Gone box and mark out this high to my entry. And that is the halfway point. That's exactly where you should put your break even. So you know when to move your stops to close. So if price will come up here and smack that again, which I don't know if it will, but will it play? Yeah. So I would have been break even there. So let's say it hit that level, I would have closed it and it would have tapped me at break even. We're gonna talk about all this later on under the videos. I don't want to confuse you guys for anyone that's new. So yeah, but that's just how you use the Gone box, and these are the settings that I use for it. Literally just 1, 0.5, and 0. That's all you need for this. There's a lot of other ways you can use this as a projection tool, and a lot of videos online about how to use it for different confluences. If anyone's looking to branch out and actually not trade my model, which I'm going to go into in much later videos, that's perfectly fine. What I do recommend is, though, to find something you like and find something you understand and to consistently stick with it. Because the second you start hopping around to different confluences or different models is when you're going to confuse yourself and you get that whole analysis paralysis where you look at the charts and you're kind of just stunned, which I've had that plenty of times before. So stick to one model you find, whether it's mine, TJR's, Justin Werlin, any other trade you could find. Stick to that one model, keep trading that one model, really learn that model and you'll be fine. That's really all it is just practice. Yeah, let's get rid of this thing. Let's see what else we have here. Okay, so this is also a huge thing I use. Within this projection tool on the left side, you'll have a long position and a short position. I use this for every single one of my trades. So when you enter a long or a short, like I showed you before, you click the long position. Let's say we're entering long again here for whatever reason. Not that it's a good confluence. Do not enter long on this. But just to show you the projection tool, the projection tool pastes on, and you have this kind of blue area, which is what I specifically marked out. I think without changing it, it's just green and red. Green meaning you're in the green and you're making money, red meaning you're losing, right? So if you're taking a long, you're betting the market's going to go up. This projection tool comes out, and the winning part is the color of your, green candles or whatever you want to make it. So for me, I made the target color, or what my take profit is going to be, was that blue, that kind of light blue background, and then the stop color would be this kind of gray background. Tells me exactly where I want price to go, where I set my take profit, where I set my stop loss. And it's also a measure tool that tells you in pips or points or ticks or whatever you want to call it. So on the top here, you'll have ticks and then you'll have your points. So your tick is the individual movement that the market could move at a time. So for the NASDAQ, and I think also the S&P, no, I'm actually wrong. I think the S&P is different. Besides the point though, for NASDAQ, it's 25 cents. So every time the market moves 25 cents, that's one tick. So here we're measuring this out at 150 ticks. That means it'll be a $37.50 movement to hit my take profit. Another important thing to note when you're using these projection tools, the risk to reward ratio is something that people base a lot of their trades on. You hear this a lot. Make sure your risk to reward is at least a 2, target higher than a 2. For me personally, and I'll go into this again later, I'm going to keep saying this, but I'm going to go into this in later videos. your risk to reward should be no number specific. Other than it being greater than one, I think you shouldn't have a negative risk to reward, but it is solely based on the context of the market, right? So anybody could take this trade here, move their stops all the way here and say, yeah, my risk to reward is 16, right? But if, you know, market or whatever opens up, this next candle opens up and it drops 9 ticks, which is absolutely nothing, you get taken out and your take profit won't get taken. You just get removed from the trade for 9 ticks. So it's really just about context and having reasonable stop losses and take profits. Again, if you're going to trade the same thing, you can't be targeting these highs. That's not really realistic. That's 554 ticks or 138 points in one trade. Um, not really realistic, especially if you're doing kind of short-term trades. Again, it's solely based off of your plan though. Like if you're a swing trader, this would make more sense, right? You target these highs, you drop your stops all the way down to these lows, right? You have a 2.37 RR, you're targeting these highs through several days, and you just play it out and see where it goes. And it's kind of playing actually, but that's not the point. That's not how I trade. But what I'm saying is you could use TradingView for all your trading needs, whatever you want. But for me personally, and how I trade, RR does not matter as long as it's not negative. And it's just based on the context of your trades, your trading plan that you draw out for yourself, and how you execute your trades. But this tool itself is very helpful with letting you know whether you should take your trade because the RR is negative, if those stops are accurate, if your take profit's accurate. Also, just plans out your trade right as you're executing or right before you execute, so you have a good idea of how much you're going to lose, how much you're going to make on this trade, and so on and so forth. So very useful. If we move on to here, same thing for short position. If I wanted the market to go down here, same idea, except now it's flipped, right? My take profit is lower because I'm betting the market's going to go down, and the stop loss is above because that's not what I want to happen. I don't want it to go up. So at a certain point, if we hit this level, my trade is now void, right? So it's going to remove me straight from the market, and vice versa. Or for the flip side, if you are taking a short and you want it to go down, there's going to be a certain point where it's not reasonable anymore to stay in this trade, and that's going to go into liquidity and the other videos that I'm going to be posting over here. But yeah, like at a certain point when you're taking your profits, the reason we have a take profit is so you don't get greedy, right? The market hits a certain level that tells you, right, my initial confluences as to why I entered this first trade are now void. There's no reason to be in this trade anymore because there's now other confluences being built on top of this trade that I just took, right? So if price action were to play out here, let me get the little path tool. If price action were to play here, bing, bing, bang, bang, boom, take profit hit, and you didn't leave the trade because you didn't say your TP, it could just as easily reverse and you can lose all your profits. There's plenty of ways that this market could play out, and that being one of them, which is why we set our TPs to not get greedy, take your money and go. It's always important, which is also why I set break even as well. If you're already in the green, there's no reason to be losing anymore, right? So if you're halfway through your trade and you're almost done here, you're almost about to take TP, why would you risk that? Let me just draw this out so you guys kind of see what I'm talking about. Why would you risk that money you already won? You're already over here. Let's say you're sweeping this liquidity over here, which again, we're going to discuss later. Why would we still be in this trade with a stop loss all the way above when if we were to invalidate a gap that was made here, there's now no reason to be in this trade, right? So that's why we moved to break even. So if we were to ever get tapped out here and price were to rush up, there wouldn't be any reason to stay in this trade. We don't lose any money. We secure positions and we're all good, right? But that's just also how I personally trade. Again, completely dependent on you, depending on who you're watching, depending on who you're taking notes from, depending on the model that you trade. And we'll go into building your own trading strategy and finding out, your position in the market and what you are comfortable doing. Let's see what else we have here. So I guess that leads us right into the path tool. We're kind of done here. I don't leave anything else. Leads us into the path tool, the brush tool. All this stuff is kind of relatively normal. Everyone knows what you do with a brush. You paint, right? Do whatever you want with that. Draw whatever you want with that. We have a highlighter, that's a given. Highlight things. All these arrows, all the same thing. Point to different areas. What we do use a lot though, what I use specifically a lot is a rectangle. So draw a little rectangle here. This I use a lot for fair value gaps, which is I'm going to discuss in later videos, like I've said a million times already. But yeah, anytime I see some sort of gap that I think will hold, that'd be useful to understand where if I'm looking for liquidity on the 1 hour. Oh my God, I can't think. On the 1 hour time frame, and I see a gap like right here, we're holding. You mark that gap out. And here we are. You understand where you are. You understand what we're holding. You understand why we're holding this price. You understand why we're moving down. This specifically helps me a lot to identify a draw. I think the other day actually, when I was looking for shorts, and there was a lot of good short opportunities here on this downtrend, market opened up. Wow, never mind. Anyway, we'll use this as a good example anyway. So we have a low right over here, as well as a big boy fair value gap, right? So that tells you price is seeking this out, right? That gives you a good understanding of this is going to be the draw. I'm kind of rambling here. I do this a lot, but again, I'm going to discuss this in later videos. But yeah, you use the box to tell you where the draw is, or to mark out certain levels that you think are important, which I'm going to go into later. That's just, I might as well just name that title of this video. You'll learn more later. More videos coming out soon. Subscribe, notifications on for those though. Anyway, yeah, so mark out levels. Again, the same thing as the line tool and every other tool. Once you mark it out, you have, by double clicking or single clicking, you have this little thing up in the top here. You could change the color, change the background. If you want to put text on it, you could double click it, add text as you like, as you please, and then save it to template, right? So whenever you make the box again, let's say this box is blue, or, this box is blue, but this is a bearish fair value gap. My bearish fair value gaps aren't blue, they're gray. We go to template, go to red FVG, which I've already marked as a previous template. Click that, and now we have that saved here. So it makes it a lot easier, a lot quicker to navigate the market. You're doing pre-market analysis, you're in some sort of a range, or you're trying to find a trade. Really easy to just mark out fair value gaps like this. So this is the biggest fair value gap here, mark it out. High chance price is going to retrace here and touch it, which actually, are we in replay mode? No. Yes, we are. Hello? Why is it skipping so slowly? Is this not replay mode? Is this live? Oh, this is live market. Okay, yeah. Tip guys, you can't skip through the live market there. So I guess I wasn't in replay mode. But anyway, yeah. So that's a big thing that I use. Boxes, rectangles. It's right over here under where the square is. Actually, for anyone that just opened up TradingView, it's going to come up as a brush. So just click the brush. It's going to pop down rectangle, and you can use it. Text box is another thing that some people use, especially if they're marking out their trades and posting it online. They'll put a little text box here and say, 15-minute draw on liquidity, right? And then here they'll put another one and say 5-minute FEG gap tab, right? It just kind of paints out their confluences and why they took a trade. For anyone that wants to do that, or you know what, even if you're trying to give a lesson, this is a cool whiteboard. You could just kind of go into the abyss over here and just start drawing, right? So foundations. And then you kind of put your little text box here and type whatever you want, right? So how to navigate, wow, I can't type, navigate TradingView. Fat fingering everything. Anyway, yeah, so you kind of get the idea. I don't really use it too often. I guess I might use it more when I'm making these videos and showing you guys what I'm doing, but wow, this is, it's gonna take too long. I'm just gonna go down here again. So I think that's about it, honestly. Oh, right, the ruler, the measure tool. So like I was showing you before with long projections and short projections with this tool up here, this measure tool kind of does the same thing for you. You click any sort of level, mark it up to the highs, and it tells you how many ticks, how many ticks over here, 343 would be your ticks, and this would be how many points you're taking. So 340 ticks on NASDAQ would be $85.75 that trade is. Yeah, it also gives you a percentage of what that value is based on the index itself. All kind of simple things. And I think for the most part, that's it. I think we're done with TradingView here. Oh, right. One more thing, backtesting. So this is the last thing. If you want to backtest, I don't know if it's possible for people to backtest if you have the free version. I really hope it is. If not, then you guys kind of have to pay for that. But you go up here, replay mode, you get this little cut tool. You could kind of zoom out and go to any time frame you want. So we go to the 1 hour, go back in the past as much as I want, find this time frame, and there we are. Now it's like we're trading the live market, right? So we're looking at this on the 1 hour. What time is this? 5 o'clock, doesn't really matter, honestly. Go to the 5-minute, and you can skip through these candles like this to see price play out. So this is something useful. A lot of people use in backtesting to test their strategy, get used to markets, used to price action. What I do want to say though is to not get too sucked into the backtesting life, because that is where that analysis paralysis comes. For anyone that doesn't know what that means, it's just staring at the charts for too long. Honestly, it's over analyzing, overseeing things, because at a certain point, these confluences that I'm going to be painting out for you guys are going to start fighting each other, and you're going to be completely confused as to where the market wants to go. So what I say is don't backtest too much. If you want to backtest, do 5 days in a session in a day. Within an hour, just do 4 or 5 days. Really focus on what you're doing. Really paint out your trading plan and follow that plan to a T when you're backtesting, and just go through the motions. But for my strategy and the way I trade my model, context is a huge thing. Actually, being able to watch these candles print out is a huge thing. So what I stress a lot is forward testing. I recommend you guys get the live markets or get into the live markets, whether that's paying for TradingView or just having that 15-minute delay. Sit in those live markets, watch the live markets, get used to how price prints out, how price reacts to news, high volatility, low volatility news, how price reacts on market open, how price reacts to highs and lows, which again, we will discuss this later. But yeah, I think that's just about it. So yeah, thanks for coming, and I'll see you in another video.